This is a data visualization project on the state of investments and venture capital amidst the current global pandemic. So going through an overview of what we'll be covering today, first we'll be looking at the data domain and defining it. Then we'll move on to the purpose of these visualizations. Then we'll look at the current Indian investment visualizations, and then we'll move to a more general global investment visualization. Here we'll be covering two main subtopics. First will be just the aggregated monthly rise in COVID cases. Next, we'll be comparing these to sector-based aggregated monthly investments. And here we'll be covering three broad subtopics which capture all the types of industries, which are the positively impacted ones, the obscurely or neutrally impacted ones, and the negatively impacted ones. So looking at the data domain, the first thing we used was VC Circle. We used this to collect data related to the current Indian economy. So we'll be looking this later, but we've been looking at things like aggregated investment values and the total number of deals. Next, for all of the stuff related to the global economy, we used Crunchbase and PitchBook. Mainly, this is for sector-based aggregated monthly investments. Finally, all information related to the COVID pandemic was found from Worldometers. Looking at the purpose of this visualization, we've divided into three parts. First part is the actual graphing of the data. Here we have an x-axis of month-based and a y-axis of value-based, and we compare with COVID cases wherever it's feasible. Second, we analyze these graphical representations in terms of positive and negative growths. And finally, based on these, we determine the current state of the industry or the sector and make suitable predictions for its future. Now we'll look at the current Indian investment ecosystem. So the two main features, like I've said earlier, are the aggregated investment values and the total number of deals being closed. To make these visualizations easier, I've put all of them on the right side and I put their corresponding data on the left side. So the first thing we're looking at is the aggregated monthly investment values. So before we actually analyze it, first thing you can notice is how volatile this actual investment ecosystem is. If we look at March of 2019, there's almost 7 billion being invested, whereas the very next month it's cut down to almost half of it, being at 3.5 billion. So if we look towards the end of this graph at January 20, we can see the actual downfall due to the coronavirus that's been caused. And to give another frame of reference, I've also included the total number of deals per month. And one thing to note is that you can't consider this without the other. For example, if you look at March to April, you can see the drop in almost half. Whereas if you look at the number of deals, it's an increase. So while we can look at these number of deals, we can't consider one without the other. Now, looking at these two, I was happy to see that there is an actual downtrend that you can notice, but the magnitude isn't fully covered. So because of that, I also wanted to look at a quarter-based system. So these are the aggregated quarterly investment values. So if you see over here, there's a much bigger magnitude of change. Right from the third quarter of 2019, there's a complete downward trend. And this can be noticed in the aggregated quarterly number of deals as well. Now coming to the global investment ecosystem, we first start by just capturing how the rise in Corona has come over the last few months. So looking at this graph, we can truly see the exponential growth rate of this pandemic. We can see how in January of 2020, it went from a single town's problem all the way up to April, which is current times, it went to a global lockdown catalyst. And we can see how fast this has been happening. Now, we'll be looking at a sector-based analysis, and first we'll look at the positively impacted industries. We'll start off with the video streaming industry. Looking at the visualization, you can see almost a perfectly direct relationship between the COVID cases and the video streaming industry. As this starts to rise, the other one does as well. This is expected because as the rise in COVID cases has been occurring, they should lock down, and because of that, more people spend time at home, resulting in more demand for video streaming. Due to this, we can say that this industry seems very stable and we can expect further growth as the number of COVID cases rise in the coming months. Next, we'll be looking at collaborative tools industry. This includes platforms like Slack and even Zoom. So taking a look at the visualization, the first thing you'll notice is that there's actually been a downwards trend since the start of the year and February and March. However, afterwards, from after March, we can see that there's been an exponential rise again after the COVID cases have increased. So in a way, you can say that the rise in COVID cases seems to have sort of resurrected this industry, and it seems like it'll only increase in the coming months. Finally, we'll take a look at the healthcare industry. Now, going into this, the most major changes that we could have noticed are that there would have been a drastic increase in the number of inpatients, which are the COVID patients, and there would be a drastic decrease in the number of outpatients, which are people going for elective surgeries, general checkups, and other stuff like that. However, you can see that there is still a clear upward trend and a positive relationship. This means that the first case of more inpatients seems to have outweighed the outpatients in terms of investments. And the number of treatment and research centers will only keep increasing in the future, along with the increase in potential inpatients, which makes this a booming industry as well. Now we'll look at the neutral industries. We'll start off with the groceries industry. I picked this because of the amount of panic buying that's been happening lately. The grocery industry would have been booming in terms of revenue. So I wanted to see if this is the same in terms of investments. Looking at the visualization, first thing you can see is that it started booming in the month of Jan and Feb, where there's a great increase in investments. However, afterwards, there seems to be a sort of decline afterwards. And you can notice that the rise in COVID cases hasn't necessarily impacted this. And however, towards the end of it, you can see that there is a sort of incline that's happening as well towards the months of March and April. Therefore, we could see greater investments occurring in this area in the following months as the number of cases increase. Next, we'll take a look at the consumer lending industry. This includes things like car loans, home loans, and even personal loans. So the first interesting thing looking at this is during the month of Jan of 2020, there was literally zero investments put into this industry. However, afterwards, it seems to have made a sizable comeback, and it's been operating at roughly 50 million from then. And we could see that, however, this change or this rise in COVID cases hasn't necessarily impacted this. And the high levels of investment in this area could indicate that we're not in a recession. However, it is possible that these high levels of investments are occurring because people speculate that there will be more number of loans being taken as the number of COVID cases increase. Now we'll look at the e-commerce industry. So we can see a sort of negative trend from the start of the year. However, from the months of Feb, March, and April, it's been sort of neutral, but a small negative trend as well. So this could be due to contrasting reasons. First of all, there would have been an increase in the amount of essential shopping. This could have included things like groceries and medicines, and there would have been a decrease in the amount of non-essential shopping. So these could have balanced each other out, resulting in a sort of neutral investment sector. Finally, we'll be taking a look at the real estate industry. So looking at the visualization, first thing you can notice is how volatile, again, this sector is in terms of investments. One important thing to note is the sharp rise in investments occurring in March, almost quadrupling the previous investments. And again, an equally sharp plunge afterwards in the months of April as the number of COVID cases have increased. So the sharp rise could show us that the economy, again, might not be headed towards a recession, but the future of this industry doesn't look too good as it is almost at an all-time low in terms of investments of this year, and it seems to be going downwards from here. Now we'll look at the negatively impacted industries, and we'll start off with the hospitality industry. So looking at the visualization, you might be a little confused because this obviously is a positive trend. However, one thing to note is that in the month of April, Airbnb raised around $1 billion in private equity. So that makes this entire industry misleading, making it look like it's a positive trend. However, if you don't consider that, then it would be at around 100 million, which is a downwards trend from the previous month, which makes this a negatively impacted industry. We'll be wrapping it up with the travel industry. And as you can see, it has been very high at the start of the year, Jan Feb, but towards the end, it started taking a very big fall or a very big plunge as the rise in COVID cases. Now, this is expected due to the global lockdown. All flights, buses, trains, all public transport, all kind of transport has been canceled and it's unoperational. So with that, we come to the end of this presentation. Hopefully you understood a thing or two about the current state of investments and venture capital, and hopefully this is worth your time. Thank you.